and how things are looking. But let's, I think, focus on the industrial space. UBS is expecting most of the policy initiatives for the sector to continue in NDA 3.0. We have Amit Mahavar, Executive Director, Industrial Analyst at UBS Investment Research, joining in now with some perspective. Amit, good morning. Good to have you with us here. Thank you for your time. I mean, markets have shown so much love to the industrial space. So over the last few days, we've had lots of questions. I mean, it's just kind of questions from investors, etc., with regards to policy. Will the focus shift to the consumer side a little bit more? But it's no one's case really that the focus will move away from industrials, maybe a little bit more for other sectors as well. So how are we positioned? You must have spoken with lots of investors who track the space as well. What's the feedback?
Hi, morning, Prashant. Thanks for having me on the show. Yeah, I think most of the policy initiatives on the industrial side, whether it's right on the PLI, a bit of it, or on the defense manufacturing, policy initiatives, which we've seen how it has impacted favorably in the last decade. We expect most of them to continue, and broadly, in our discussion with investors, that has been the view. But yeah, that's basically coming in select pockets. Not all segments might do well. So broadly speaking, whatever the government had started in last two terms, in the third term, we believe bulk of that is going to continue, and you will see that reflection in the recurring order run rate in especially product companies, and even on the profitability, some of that is reflecting.
Amit, hi, morning. Good to have you on. So can you expand on that? Because given what you just said, that perhaps the ordering momentum and the policy momentum will continue, we come back to the drawing board and ask you the same question that we would have asked you before the 4th of June, right? Which is valuations and how much is really still left on the table. Because you've got, these stocks like Siemens and ABB now trading between 70, 80 times. So can earnings keep up with these kind of elevated, price to earnings multiples?
Yeah. Hi, Surabhi. So if you see, let me not go into specific stocks. I'm not allowed to talk on individual names, but I can definitely talk on the segments, right? If you've seen last 8 to 10 years, right, you've seen in mobility, we've seen upgrades in rail infrastructure, right? Then you have companies which are technology leaders who are catering to that. In data consumption, you have data centers where India is one of the hottest market in the Asia Pacific region, right? So you have again very specific companies who have the portfolio of products, software, power distribution units, cooling technologies, supplying to that, or genset standby, right? Likewise, in the entire electrification portfolio, you have medium voltage and high voltage product companies which are been benefiting from government initiatives, right? And then last but not the least, you have defense manufacturing and EMS. So broadly, if you see, we are more constructive and optimistic on these technology equipment players who are not only catering to the domestic demand, but also have a decent and expanding export business. So the challenge around valuations has always been there for last so many years in industrial, but it has gone up multifold in last particularly 12 months. But I think if you see the growth, at least on our coverage, we expect 18 to 19%, new order and earnings compounding in the next 3 to 4 years, which should keep the investors' interest high. To an extent, a lot of these companies are working on expansion of their addressable market, which also justifies the premium valuations. Most of them are commanding right now. Sophie.
Hi, Amit. Good morning and welcome to the show. This is Nigel on this side. Hope to see you on the show more often, Amit. Well, I wanted your comment on private capex. Are there still only green shoots, or is it coming back in the big way? Your comment on private capex. And what about margins? For Q4, most companies delivered good margins. But with the input cost spike, are they hitting a top?
Hi, Nigel. So first on private capex, we don't have a view that, we are going to see a very strong greenfield capacity expansions like the one we saw between 2004-5 to 8-9 period. What we are, saying is that in terms of the industrial subsets, the segments have increased multifold. The conventional segments like cement, steel, oil and gas, power, etc., used to be the bulk of demand for incumbent leaders. If you see today, There are like a dozen and two segments which are making the revenue streams much more diversified. The growth and earnings acceleration is far less cyclical than it used to be. Right, as I said, segments like railway, data center, the electrification portfolio is making the growth more recurring and sustainable. And in the private side, you have a lot of efficiency capex, right? You have companies expanding the portfolio of the automation that they have. The motors are more efficient, right? Deployment of drives. Then you have the entire factory setup where a lot of not only the large companies but medium and SME segment players are also upgrading the factory infrastructure. You have a whole host of new manufacturing with EMS ecosystem and defense ecosystem in India, which was not there 5, 10, 15 years ago, right? So I think generally speaking, we are of the view that the private spending is more towards upgrading the factory setup and also now catering to the export market, which might have a different requirement from a factory setup point of view. So that's our view, Nigel. Yeah.
Got it. So railways, data centers, medium and high voltage power equipment, defense manufacturing and EMS. These are the areas that you like, right?
Yes.
Yeah. Amit, on the data centers, I mean, what is published we're not asking you to talk about something which you're not published on. Is there a play with which you have coverage on?
Again, Prashant, I'm sorry, I will disappoint you here. I can't give names, but you have companies which are large suppliers. The market share, you have market share which are very high for some of these, technology companies on the data center value chain.
Amit, we'll leave it there. Thank you very much for your time. Good speaking with you. Appreciate it. We'll take a quick break here.